So the global central bank easing cycle has commenced. September 2024 is the biggest month of monetary easing since April of 2020, with the highest number of global central bank policy rate cuts since that month. So given all of this, given the fact that the global central bank easing cycle is commencing, disinflation is intact, we're getting strong Q4 GDP estimates, all signs point to the most bullish macro and Bitcoin native backdrop since 2020. So Bitcoin soared past $66,000 this morning, which left many people very, very euphoric, and rightfully so. This 6-month downtrend has been very, very constructive. If you'll take a look at this chart here, this is the chart of short-term holder supply and long-term holder supply. So coins are moving out of the hands of short-term holders and into the hands of long-term holders. That is what has occurred over this 6-month period. Long-term holder supply in green has grinded higher, while Bitcoin's price is consolidated, and the short-term holder supply in red has grinded lower, making for a very steady base of Bitcoin holders who aren't willing to part with their coins at current prices. Now, long-term holder supply is starting to inflect down, and you can see that in the green arrows that are marked there, and short-term holder supply is starting to inflect up. This behavior starts at the start of bull markets. You can see this in 2020 leading into the 2021 bull market, which I've marked there. And it also happened in January when Bitcoin rose 78% from 41K to 74K. Now you can start to see this pre-bull run supply shift happening again. And so Bitcoin has also set its first higher high in 6 months since it began consolidating after we hit this all-time high back in March. That's a very constructive development for the bull market because it marks a shift in sentiment and momentum, okay? Buyers are gaining traction over sellers, and Bitcoin is now up 35% off of its local low set all the way back here in early August. And so couple this with the supportive macro picture that I just outlined that I'll talk about a little bit more, and these supply dynamics moving from short-term holders to long-term holders to more short-term holders, that raises the likelihood of this breakout from this 6-month downtrend that we've experienced over these last 6 months, sometime over the next few weeks, obviously, should the data continue as it is developing and should this risk on impulse stay intact. And from there, it's only a 5.5% move to reclaim previous all-time highs. And at that point, momentum will be so high that all bets are off where we can go for this cycle. So the Fed's rate cut paired with China's massive monetary stimulus, they're all good news. Growth remains stable here stateside. GDP now is just revised up today, above 3% for Q4. And PCE inflation, which is the Fed's preferred price inflation gauge, also came in lower than analyst expectations today. And that lends more credence to this narrative that the Fed is on its way to declaring victory over inflation. The risk on impulse in markets as a result of this macro backdrop is most acutely visible in Bitcoin, obviously from a price action standpoint, like you could see here, but also in behavior on Wall Street. Bitcoin ETF inflows are ramping back up. Wall Street is clearly eager to capture the outsized gains you can get in Bitcoin during the historically strong month of October, which is one of Bitcoin's actually most consistently bullish month. The ETFs took in $363 million in net inflows yesterday, which is the largest net inflow since the August 8th net inflow of $195 million when Bitcoin was at $59,000. So almost 2 times the capital came into the Bitcoin ETFs at a price of $65,000 compared to when it was at $59K. So willing to deploy almost double the amount of capital into Bitcoin at a higher price says that the market believes Bitcoin is cheap on a relative basis when it's at $66K. And so the market expects it to move much higher this cycle. And so this has been the best September on record for Bitcoin. If we take a look at this screenshot right here, this is Bitcoin's monthly returns. Over there at the very top where it says September, you could go one slot down, 11.25%. That is how much Bitcoin has risen during this month of September. And September is a historically weak month, not just for Bitcoin, but for the broader equity market as well. And so Bitcoin is also catching up to the equity market that has lagged behind for the last 6 months. Bitcoin, of course, is up 11.03% or 11% over the last month compared to the S&P 500 rising only 2.6%. And we're about to enter October, okay? And it's colloquially dubbed Uptober, and it's dubbed that for a reason. It's historically the best month of the year for Bitcoin, excluding November, which is skewed by some data back in 2013. October is the most consistently bullish month for Bitcoin in its short trading history with an average return of 22.9%. You can see there at the very bottom. And so hot off the heels of this record-setting month for September. And with this very supportive macro backdrop, like I said, resilient U.S. growth, continued disinflation, and massive Chinese stimulus, coupled with global central banks doing more rate cuts than they have since April of 2020, Bitcoin is slated to have a superb Q4. And having just crossed above the 200-day moving average, which you could see here in blue, and the short-term holder cost basis, which you could see in red, which are two key levels for bull market support, Bitcoin has cemented itself for a hardy bull market continuation up to brand new all-time highs. Now, of course, it all comes down to earnings, right? As the Fed cuts rates, financial conditions, which are already loose, are going to loosen even further. If earnings can remain intact and earnings continue getting revised higher, the labor market will remain tacked in too. Obviously, this is all data dependent. If we see a big pullback in consumer spending, which we haven't observed yet, that's reason to be cautious that the labor market and cautious about the labor market rather, and you may look for a pullback in risk assets from there. The path of least resistance as the Fed cuts rates is for earnings estimates to expand under this very supportive environment from the Fed, and therefore for the labor market to be just fine. Sitting in cash at this stage in the cycle is a fool's game. Now, of course, if you're looking to appreciate all of this upside, if you're looking to capture those outsized gains, just like investors on Wall Street are, make sure you check out Thea. It's the world's simplest Bitcoin self-custody solution. And now you can buy Bitcoin directly into the Thea app. You can purchase Bitcoin directly into self-custody, absolving yourself of all counterparty risks and risks of exposure and hacking on places like Coinbase. We obviously saw what happened to FTX. You do not want that to happen to your Bitcoin. Eliminate single points of failure in your Bitcoin custody solution. Check out Thea today, spelled Theya on the App Store. Set up a self-custody vault in an extremely quick amount of time and take all of your Bitcoin into your own hands. If you haven't already, guys, it's high time you did it. And if you're using another Bitcoin self-custody solution, consider multi-sig. Thea is the world's simplest Bitcoin multi-sig solution. That way you are eliminating single points of failure in your Bitcoin setup. If you end up losing one of your keys, you don't lose access to your funds. So that's all for today. Thank you so much for watching. Have a great weekend, and I will talk to you on Monday.